Hello and welcome back to ASX Market Watch. Thank you very much for joining me. It's great to have you here watching the market, and what a great excuse it is to have a chat about the market and see exactly what's going on. It's probably one of my favorite pastimes apart from actually participating in the market. You've got to love it. This week I'm looking at three different indices, the top 200 in Australia, the Dow Jones in America, and the FTSE in Europe. And these three indices, I just want to have a look at them because over the last 6 months they've really been correlated. They've been trending together. They've been, making great gains together. But now it seems as though these three indices are kind of marching to a different beat. They've all separated and they're all doing their own thing. And I just want to show you exactly why that is and the tools that I'm using to measure them so that you can have a look and possibly use them in your own trading if you're so inclined. So again, thank you so much for joining me. It's great to have you here. Let's get started. The first one is the ASX Top 200. Now, anyone who has watched any of these videos before will know one of the simplest tools that I use is the humble trend line. This is a daily chart of the top 200. And as you can see, the trend line was crossed, the solid trend line was crossed in July 2009, gave us some great gains over the last sort of 5 to 6 months, had a bit of a consolidation period, and now we're in a bit of a correction. The correction started, as you can see here, this is our uptrend line. It was crossed on the 22nd of January 2010, and that's when we personally called the correction at the current correction at the moment on the top 200, and the market has continued to fall. A few weeks ago we called for a bounce. We've had the bounce, and great things are happening. Now we're in a little bit of a sideways movement period, or if you want to look at it technically, we're still in a correction because we haven't really crossed a downtrend line, which would signal another uptrend movement. So technically, if you're looking at the trend lines, still in correction mode. We are having our bounce, and from here the market could go into more bullish territory or more bearish territory. As I said last week, the bearish territory would be signaled with a close below 4,469. That would be, if we look at the weekly chart here, that would be a Dow theory bear market signal with a trough, a lower peak, and then closing past the previous trough. So that would be your Dow theory bear market signal. If we were to look at the bullish signal, what we really want is for the market to cross above a downtrend line, and this would be the downtrend line here. As I said last week as well, if you don't have a downtrend line, you can use a 45-degree angle line. And again, people use those as Gann fans or geometric fans. I just personally draw them in myself. I hope that doesn't offend anyone, but it seems to work for me. And as you can see, the market very clearly has not been able to reach that level as yet. The level I said last week was 4,750 to 4,800. That would really be the 45-degree angle. If you wanted to look at the averages over history, on the ASX Top 200, the average down move, according to my own personal research here, this one isn't in any books that I've found, but according to this research that I've done, the average downtrend lasts for 2.3 months, so that's about 9 weeks. Now, what we've had so far is probably about 1.5 months, so technically you could have another month if you were looking at the averages over history over the last sort of 25 to 30 years on the ASX Top 200. You could technically see a downtrend for another 1 month if you were looking at it from an average point of view. Also, how long percentage-wise does a down move go? Well, 10.1% is the average drop from the entry to the actual trough, or to the trough in a downward move. So the entry was at 4,750, ironically here. That was our entry point on the 22nd of January. Now, 10% down from that, you'd probably be looking at about 470 points. My maths is terrible, I do apologise, but that's probably what you'd be looking at as a drop if you were looking at the average drop in a short move, or a downward move. So 4,700 minus 470, not exactly sure. You could probably be looking at about 4,300. Someone else's maths is probably far better than mine, so you could probably figure that out. But that would be around about the level. Again, if you were looking at the averages over history, that a short move might drop to. And, I mean, technically we could have a little bit to go. Now, I hope that's helped on the ASX Top 200. On the Dow Jones, This one is as I said, it's moving to a different beat this week, and this is our uptrend line on a daily chart of the ASX of the Dow Jones. Sorry, on the Dow Jones, as you can see, it did cross it on the 22nd of January as well. So we had our correction to sort of start there. It didn't go for very long on the Dow Jones, and what we're looking at on the Dow Jones at the moment is this is our longer term downtrend line, and as I said last week, the price is actually snaking around this downtrend line. So it's gone above it, it's gone below it, it's gone above it now again, but really price is still just in this sideways band on the Dow Jones, and it's really between 10,700 and 9,700, so it's a bit of a 1,000-point snake just around this downtrend line. If price was to really solidly break out of this little range, then we could expect it to, for instance, if it broke up, then we'd be expecting more bullish behavior. If it broke down out of this range, we'd be expecting bearish behavior. So it's fairly simple on the Dow Jones at the moment. Really, it is in this sideward range, which is snaking around the downtrend line, as you can well see there. The FTSE is another matter. This is the last stock that I just want to show you. The FTSE is probably the most bullish out of all of these. If we look at the long-term downtrend line, as you can see here on the FTSE, price has crossed well above it still, and as you can see with the uptrend line, this one here, that is the price is well above that one as well. So if you wanted to look at it from a technical point of view, the FTSE being above both of its trend lines is technically the most bullish out of the three indices at the moment. And yeah, I mean, really, that's what I mean by they're all moving to a different beat. The FTSE is probably the most bullish. The Dow Jones is really in this sideward range, and it's sort of snaking around the downtrend line there, which you will find that it does do. As anyone who looks at support and resistance, once support is crossed, it becomes resistance. Once resistance is crossed, it becomes support. So that's really, it's just doing this constantly at the moment, and it probably will happen over the next maybe couple of weeks until it breaks out, as I said. The top 200 really still in correction mode until we cross above that 4,750 level, or full-on bearish mode if we cross below 4,469, which would be that Dow theory bear exit that we spoke about just before. So anyway, I hope that's helped on all those three indices. As I said, everyone's sort of going away and doing their own thing at the moment. Not a bad thing if you know how to read the chart, and just a simple tool like the trend line can really help you look at where exactly these indices might be going, and where what direction your trading should be going in. In the meantime, if 3 out of 4 stocks will follow the overall indice. Okay, thanks very much, guys. Thanks for dropping by. And seriously, if you want to drop by the website, it's asxmarketwatch.com. There's a whole bunch of free tools there, and a free course on there as well, which talks about risk. It talks about entry and exit tools. It's a lot of good stuff, and it is for free. So please stop by if you feel so inclined. Other than that, hopefully I will see you next week, and happy trending until then.